Joining me now is Vivek Arya, Senior Semiconductor Analyst at BofA Securities. Vivek, is this kind of another on again, off again, or do you think we have at last sort of a floor in what the Trump administration is going to allow, is going to look for, and it's off to the races?
Sure. I think, John, it's hard to make a long-term forecast with any kind of geopolitical event. But for now, I think it's a good sign that there is easing of tensions between U.S. and China. We saw this with the easing of restrictions around chip design EDA software with the approval of the ANSYS deal for Synopsys. So it's very good to see this restriction also being removed potentially for Nvidia products, for AMD products. I think it helps the U.S. AI ecosystem stay involved with the Chinese AI software developers who are innovating very rapidly, like a DeepSeek. And then also, I do think that it helps the U.S. kind of maintain its dominance over the AI technology stack over the next number of years. Because, I think only the U.S. companies really have this nice symbiotic relationship between hardware and software. So by keeping involved with wherever software is being deployed, I do think it helps the U.S. continue to dominate the AI stack. So for now, I think it's very good news. But these things do have a habit of changing on a frequent basis.
We see Supermicro, we see AMD jumping on this, not Dell, interestingly to me. What does this signal about the extent to which computer chips are bargaining chips as far as the U.S.'s relationship with China, and who is likely to benefit if they're allowed to continue selling to China?
Sure. I think that, first of all, there is the China benefits are probably more for merchant silicon. That would be Nvidia, that would be AMD. But we might also see benefits flow across to the networking side. That is Broadcom, that is Marvell, to some of their chip design software suppliers, to some of the foundries, to memory. So there is kind of that broadening, right, of benefits. But to kind of put things in perspective, China is about 10 or 15% of AI spending today. We think if these restrictions continue to be at these levels over time, China's contribution to the AI capex is probably going to be only about 5 to 10%. But what is rapidly kind of taking that place is the spending that is being done in all these sovereign locations. Look at the spending that the Middle East is doing. I think that could far exceed the kind of spending that China might be doing in AI. US, of course, continues to spend. Recently, we heard Meta plan these multi-gigawatt data centers, Prometheus and Hyperion. Right, every gigawatt, remember, is a $50 billion of AI opportunity for the likes of Nvidia. So we think that this benefits are spreading globally beyond China.
It also seems that a potential related benefit here is if you're a company that sells a lot into the region, into Singapore, and there might be controversy over where those goods that you're selling end up, is China getting a hold of them? This might take some of that off the table and perhaps some risk for you now.
Yeah, I think it does help to some extent, although these companies have been clear that what they're shipping to Singapore and certain other Asian locations outside of China is really because some of their customers want the billing to be done in those locations. They're not actually, shipping a lot of chips to those locations
of course
per
not.
se.
Yeah.
Right. Yeah. But I do think, but I agree with your bigger perspective that the more these chips are available globally, I do think it helps to really invigorate the AI ecosystem globally, right? And I think that continues to, that helps the U.S. to maintain its dominance in this AI stack for a number of years.